Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. And the Talking Point today are the views of Gautam Shah, founder and chief strategist at Goldilocks Premium Research. And it's an opportune time to get him simply because for the lay investor, the market seems to be in a spot wherein it's done a little bit. It probably can do more, but nobody can say that with certainty. Every morning, my trade setup, I mentioned this, that we are at the mercy of what would happen to the global cues. But the key about getting Gautam Shah is that he can figure out trends and movements where most lay people cannot. Gautam, great having you. Thanks for joining in.
Good morning, Neeraj. Thanks for having me.
So, Gautam, that's the key question first. We've traveled a little bit from the lows of 15,800. We are at about 17,300 odd. Whatever little I read about, fundamentally at least, doesn't seem to be pointing towards necessarily a trend getting built on the upside, or for sure, a breakdown happening at the downside. We kind of got somewhere in between. What are the charts telling you, technically?
Yes, Neeraj, just like every downtrend starts with a feeling that, okay, it's just a correction and the markets will bounce back and go on to make new highs. What happened in October last year when we first started to correct at 18,600. Similarly, after we see a rebound after a bottom, it is usually led by short covering and the fact that there is fear of missing out. And as you rightly said, it's very tentative right now because there is one camp that believes that the market cannot sustain and will go back and retest and maybe make new lows. And there is another smaller camp which believes that a lot of the negatives are already in the price and therefore it can continue to move higher. The way I read it, I want to be in that smaller camp. I think the market seems to be stabilizing really well. It is showing a lot of maturity. Having digested this excellent move from 15,600 to 17,300, it seems to have just got sideways, which is a very positive sign. And if you look at the last 5 months, every time after a pullback, the market showed the urgency to go off, come off quite a bit and break support levels very quickly. This is something which has not happened in this attempt. The participation is better. The volume activity is good. The market has stopped reacting to news flow on the guns and cannons. India VIX has come off, quite a bit in the recent past. Midcaps have started to participate. Global markets have stabilized quite a bit. And there are no negative triggers at this point of time, which was the case during every pullback of the last 5 to 6 months. So I think the market is consolidating really well. It seems to be in this band of 16,900, 17,350. My sense is that it is going to break out on the upside. And once that breakout happens, I think you will see a gradual move towards 17,800 and eventually 18,100. So I would be positive on the charts, and I'm in the camp which believes that the bottom has been made. And also another reason why the market is a little tentative right now is because this is March end. Everybody has their tax planning. There is so much that has happened in the equity markets. So I think we will remain subdued for another 3-4 days. But as we get into April, I think the bullish momentum is going to pick up.
Interesting. It's also the time wherein the results come to the fore, and we also have an RBI policy likely, and maybe some rate tinkering there. Let's wait and watch. Which brings me to my question about banks, Gautam, or rather, what leads this index higher? Is it a combination of banks, IT, Reliance, some specific names, or are there 1 or 2 segments which will take prominence, if you will, in this next maybe 500 to 800 point up move as and when it comes?
Neeraj, if you really look at the market action of the recent past, what you notice is that the fall first started with the mid caps and the small caps, and then you had the top quality stocks, starting to collapse. I mean, we saw it with Asian Paints and many other names. The reason I'm bringing that is because that was a clear indication of capitulation. And now, if you look at it, a lot of top quality names have made a very good comeback, led by Reliance Industries. Obviously, even banks, if you look at HDFC Bank, it has stopped underperforming. And a trend that I've seen with a lot of stocks, including the large caps, if you look at the pre-COVID highs for a lot of stocks, which was February 2020 or November 2019, a lot of stocks hit that pre-COVID high and have rebounded. So I'm tempted to believe that they could have completed their underperformance. So I think there are a lot of contributors actually. Banks, we do like it. So ICICI, State Bank, HDFC Bank. And once the Bank Nifty gets past 36,600, I think you're going to see a 10 to 12% move out there. Reliance obviously looks rock solid on the charts, having reversed from that important support of 2350. So that stock should be heading towards new lifetime highs. And look at what the IT index has done. I think rock steady in the recent past. Midcap IT is joining the party once again. Large cap IT has been relatively steady, so that should do well. ITC is contributing, L&T is contributing, Bharti's come back, some of the real estate names are doing well. So I think the problem a month back was that there were no contributors when the markets turned around or saw a pullback. But this turnaround is looking far more genuine because the participation is widespread.
Yeah, so actually, point well taken. Can I kind of talk about IT for a bit because it's expected that the results will be fairly decent. If Accenture's numbers and commentary is anything to go by, we might actually have a bit of a surprise on our hands as well. Do you have a preference for large cap IT, Gautam? As you said, both look good and mid cap IT is also participating. Is it a preference for large cap IT, or do you believe it will be equally sparse? Or contrary, you may actually prefer the mid cap space as well? I don't know. I'm just asking.
I would prefer the mid cap IT. I think all along we were much more bullish on the large cap IT because we thought that the mid cap IT risk reward was not justified for fresh longs. But post this correction of the last 3 or 4 months and the fact that many of these mid cap IT stocks actually went through a very large correction, I think their turnarounds are looking far more solid. The problem with large cap IT is that it's crowded. It's not something that can, gallop. But then mid-cap IT, look at what Tata Elxsi has done. Look at what Mindtree is doing. Look at Birlasoft, LTTS, LTI. I think all of these stocks have very good setups. They're turning around from some very important supports. So while the IT index can gradually go back to lifetime highs and the top names will do well, our preference is Wipro and HCL Tech. But I think the mid-cap IT clearly is a much better trading opportunity for the next 4 to 8 weeks.
It's quite interesting, Gautam, that the ones that you're preferring on the charts as well, I presume, are the ones which are also having value. And till now, in 2022, we've seen value outperform growth at exorbitant price any which way. So it's quite interesting that there is a bit of a confluence of sorts between value as well as what charts are showing. Quite interesting. Can I ask you about Pharma? I was reading your note very carefully, and it seems that you seem constructive on Pharma. There is also a fundamental development in that NPP has allowed a price increase. Some of the companies like Cipla, etc., might be big beneficiaries of the same. Any thoughts on Pharma and what could drive? And when do you, is there a time-bound place by which, or time-bound piece by which you believe the price action in Pharma could start or continue?
Well, I think the uptrend has resumed. Pharma was one of the best performers in 2020. First half of 2021, it did exceedingly well. And then June, July 2021, it got into a correction which continued for almost 8 months. Just about everybody gave up on Pharma. I think the top quality names witnessed corrections of about 50-60%. There was nothing positive about it, at least on the news flow front. But gradually, if you look at the last 2 or 3 weeks, the way some of the underperformers have come back, including a Dr. Reddy's, it is an indication that the sector is back in the reckoning. And I think on the charts, 12,500 was such an important support from where the turn has happened. And this is a sector which has actually led the Nifty recovery in the recent past, something that we've not seen in the last 1 year. So I'm very, very constructive about Pharma. I think the index will go on to make lifetime highs, which is, I guess, not the view of many market participants. But because the damage was so large, the scope to recover is equally large. And while Sun Pharma has been in our model portfolio all along and has been the star performer, we also like stocks like Cipla, Laurus Labs, even a Dr. Reddy's, which seems to have made a short-term bottom. So I think Pharma as a sector is back, and I think it provides a very good risk-reward based opportunity here.
Actually, just a quick follow-up, Gautam. So fundamentally, we kind of bucket Pharma into 3 pockets, right? One is the erstwhile key exporters, the likes of Sun Pharma, Lupin, Cipla, etc. So Cipla has a large domestic presence too. Then the key API players, the likes of Divi's Lab, Laurus, maybe a Granules, maybe a Sequent, whatever you throw in. And then the healthcare companies, the hospitals and the diagnostic chains, etc. If I were to ask you which of these 3 buckets looks the most promising, do you have an answer, or do you like things equally from all the 3 buckets, so to say?
I would go with the first 2 buckets. I think till 6 months back, when COVID was around, we were looking at hospitals and diagnostics very closely. Did very well, and then many of these stocks, you must have seen what happened to Dr. Path Lab or a Metropolis. They just fell off the cliff. And now, I think the other 2 buckets, including the API plays, we particularly like Laurus for a move back to lifetime highs. So I think both the buckets look actually equally good. So I wouldn't really want to pinpoint, but both look very good on the charts.
Okay. Gautam, I'm compelled to ask you about one particular stock, and that is ITC, by virtue of one, that the move that the stock has made in the last 1 month, it's been quite exemplary. And two, I remember a conversation that we had. I don't remember the exact date, excuse me, but back then, maybe 6 months, 9 months, 12 months ago, I don't remember the exact time frame. You had mentioned that you are starting to like ITC, and over a 2-year time frame, ITC could actually surprise people. Now, my question to you is, has it done that move which will lead it to surprise people? Because I don't think people even anticipate 17%, to be honest, in ITC. So is this the extent of the move, or do you believe ITC is setting the stage for something grander?
People talk about ITC and its returns, but I think a 10% move on the Nifty at these levels, given the geopolitical environment that we live in, is very, very difficult. You're not in 2021 wherein you had a lot of tailwinds and you can just keep making higher highs consistently, something that we market participants were used to. So now we are trying to, identify stocks where I feel a 10, 15, 20, 25% up move is possible. And I think ITC fits the bill. It was around that level of 200, 205 when we first turned very positive. And we just thought that keeping the dividend yield angle in mind and the fact that it is such a strong brand, in an environment where there were so many startups and so many new listings, where all kinds of theories were being put across, and you have seen what has happened to many of these new age names. I think in that context, ITC was always very interesting on the charts. I think even now it looks good. So when we covered it at 200, our eventual target was 300. And we made the point that in that journey from 200 to 300, it might take its time. It's like test cricket. It might take its time. It will get there gradually. And I think it will beat a lot of large cap stocks in terms of overall returns. So we still like it. I think any dip towards 225, 230 is a buying opportunity. And we remain positioned for 300. I think both ITC and Bharti, according to me, are structural names, which will do very well over the next 6 to 12 to 18 months.
That's very interesting. Okay. Gautam, last couple of questions really, won't hold you for too long. Some pockets which have really gained momentum in the last few days. So while real estate is kind of broken off, if you will, and I believe fundamentally too, if indeed steel is going to, by the way, would want to understand about steel as well. But first, real estate, that if steel prices continue to hover where they are or actually see an uptick, it could actually be negative fundamentally for real estate. What are your thoughts on what some of these large real estate names are showing?
Neeraj, we live in a world where intermarket relationships don't work. I think we've seen that a number of times in the last 1 year, because you could have two different sectors having two different kind of news flow, but doing well at the same time. So we actually like real estate and metals. In fact, both these sectors are our favorite picks at this point of time. Real estate, I know it's seen a bit of a cool off in the recent past, but people forget that last year, the index went up 80% in a matter of, six months. And when you have such kind of a monster rally, the corrections are always deep. And I think the men have been separated from the boys. You have seen what a Oberoi Reality and a DLF and a Brigade and a Prestige have done in comparison to a Godrej, properties and some of the other names. So I think real estate is a great buy. I think I've said this umpteen number of times in the last few months, and I do see the index go back and test new lifetime highs eventually. So be a top buyer, in the top 4 or 5 names. And talking about metals, it's at a lifetime high. It went through a 6-month-long consolidation, very large consolidation, and now we like the likes of JSPL, Tata Steel, even a Steel Authority of India, JSW Steel, all have excellent setups. And my eventual target for the NSE Metals Index is about 7,000. So that's about 7 to 8%. So banks, metals, IT, pharma selectively, and real estate are the pockets where I see immense opportunities for the next 6 months.
Okay. My final question, Gautam, and that is on a pocket that is not discussed very much per se, but of late has been in the thick of things. Media, be it PVR Inox today or Z last week, or for that matter, even the smaller names, which are not derivative names, but they are making their presence felt by virtue of being in the news flow and the price movement. It's a wide bucket with a lot of small names and not a very large representation per se. But any thoughts on media or any specific names within there?
No, I wouldn't be too excited. I think I've stayed away from the sector and I've recommended people to stay away from the last 5 years. It's worked. Maybe it's not worked in the last 2 months, because if they've done exceedingly well, I think it could be temporary. At least on the charts, I really don't see any structural change. But within media, or if you want to broaden the segment, I love the unlock trade. I think I have been, a big bull on the unlock trade. I've said this so many times in the past. So if you look at it in that context, yes, we like an Inox, we love an Indian Hotels, we love Delta Corp, we love Phoenix Mills, Relaxo, Bata. I think all of these stocks, have immense potential. And then on top of it would be Indian Hotels, a brand which I believe, should be in every investor's portfolio for the next 5 to 10 years. So I think that there are immense opportunities in the unlock trade. Thankfully, COVID is not coming back. And if you're going to have normal times, yeah, touch wood, I think you are going to see unlock stocks do exceedingly well.
Yeah, I was going to ask you actually, where is it that you are circumspect, Gautam? You seem fairly optimistic currently. What is that point wherein you are a bit circumspect, specifically theme-wise?
Anything that is grade C and grade D. I think you must have seen in this last 1 month, it's basically the top quality names that have rebounded with the market from 15,600 to 17,300. But the men have been separated from the boys. I mean, grade C and grade D stocks, whether it's in the mid caps or small caps, have not done well. So I think the key mantra right now is stick to the leaders, stick to the top 2 in every sector, given the geopolitical situation that we are in, and also stick to, very well traded names, because, one bad day and a lot of these illiquid stocks, we've seen it in the last 3 months, they can just fall off the cliff. So stick to the leaders, I think, till the situation stabilizes, hopefully in the next 3 to 4 months.
All right. Gautam, really good of you to join us today at a crucial juncture, I might add, even though the trends may not quite show it, but the uncertainty is very important, and therefore great having you today. Thank you for taking the time out.
Thanks, Neeraj. Thank you.
The pleasure was ours. Viewers, thanks for tuning in.